Today is Monday, August 19th, 2019, and in this week's recap, equities are hit by considerable volatility following developments in the bond market as well as the U.S. China trade dispute. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. U.S. stock indices saw significant ups and downs last week, with traders looking for economic cues from Treasury yields and also developments in the tariff fight between the U.S. and China. The S&P 500 lost 1.03% for the week. The Dow Jones Industrials Average and NASDAQ Composite respectively declined 1.53% and 0.79%. Overseas shares also retreated. The MSCI EAFE index lost 2.34%. Wednesday, the yield of the 2-year Treasury bond briefly exceeded that of the 10-year Treasury bond. When this circumstance occurs, it signals that institutional investors are less confident about the near-term economy. That view is not uniform. Asked whether the U.S. was on the verge of an economic slowdown, former Federal Reserve Chair Janet Yellen told Fox Business the answer is most likely no, noting that the economy has enough strength to avoid one. The demand for bonds has definitely pushed prices for 10-year and 30-year Treasuries higher, and their yields are now lower. Of course, bond yields usually fall as bond prices rise. The 30-year Treasury yield hit a historic low last week. Last week, the Office of the U.S. Trade Representative announced that about half the Chinese imports slated to be taxed with 10% tariffs starting September 1st would be exempt from such taxes until December 15th. The White House said that the reprieve was made with the upcoming holiday shopping season in mind, so that tariffs might have less impact on both retailers and consumers. And this week's final thought, lower interest rates on bonds are now influencing mortgages. According to mortgage reseller Freddie Mac, the average interest rate on a conventional 30-year home loan was just 3.6% last week. That compares to 3.81% roughly a month ago. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients' life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out nocostfinancialdashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.